ready to just embark on an uptrend. You're ending a down cycle from my perspective, and I teach this in these courses. What else here? Well, tomorrow when you reopen an XLI, the odds strongly favor you're going to lose the embedded reading. The problem is you're at one of the objectives, the 100-day average, the closest average. If the market wants to add to it, then wherever the red line, the 18-day average comes in, would be important. But you haven't lost it yet. 2049 is not closing over 21. XLE, still bearish. I still see the pros going short this market, looking for lower prices. Look at how all this is set up. The 18 got under the 200, the 100 finally, and prices did go down for new lows on this move. I don't know that it's over by any stretch. In the gold market, a bear market rally into the 18-day average. Let's see if it can do anything with that. A close over 243.87 for the moment would give you bullish bias and an uptrend on the swing line. What else? The market has been holding very nicely. The Bollinger Band challenge and the 100-day average. So we'll see. When a market's under the 18-day average, other than looking for a pop via the lost embedded reading, that's about all that I look for. In SLV, like the gold, where are you fighting? You're fighting at that 200-day average, trying to prove you can hold it, but there's something very bearish happening under the surface. The 18 just got under the 100. Now, it's not lined up in an ideal bear scenario because you've got the 18 and the 100-day average up here and the 200 down here. So I don't know that the lineup means too much one way or the other. The copper market is still in a bearish lineup. 18-day average under the 100, the 100 under the 200, the market under everything, and the market flirting with losing the embedded reading. An idea that it could be lost would be taking out the lows of Tuesday, and that could set you back up for down here. If the market loses the embedded reading, then I'd look for wherever the 18-day average is to come in, and that to be your next resistance. BND, TLT have fully embedded readings. I still see them as short sales on rallies. Look at how the 18-day average just got underneath the 200. Now, it's not the ideal bear setup because the 100's up here. It would take quite a while to get it all lined up to get you the 18 under the 100 and 100 under the 200. In the dollar index, you know, this looks like a monster break. It really wasn't. This was a break of cents, and the market fell down here. Now, the interesting part is the dollar's still strong on the futures. So we'll see if the market can do anything. It got one day under the Bollinger Band and came right back to it. If you clear 29.37, you can get some short covering to make an attempt at filling that. I don't see the dollar having ended on the charts at this point. It's bull thrust, so we'll see which way that goes. And on FXE, you have lower highs, lower lows, but oversold. So, you know, you could get some short covering here. That wouldn't surprise me, but I don't think you're going anywhere very important in the markets. But I want to take you somewhere that's important with what I've done with this sale, and that's what I want to show you. So for the sale, you purchase my full charting course. That's where I cover window envelopes, swing lines, slow stochastics. I touch on so many different things, and we're talking, it's a big amount of chapters, all right? It's all video. There's hours of it. You'll go through it. It's not a race. You learn. You come in the morning with me in my videos where I show you what I'm telling my subscribers. You see, and I explain everything, what's happening. It starts reinforcing it. But as I said, what the beauty of this is, you buy the chart and you can either get a Bollinger Band or an outside day course for free. Instead of it being, that's up until today, this was the advertised price, $5.99 for this brief sale. It goes down 50%. In addition, I throw in 30 days of my complete futures research. I charge $60 a month for that normally. My 30-day trial to my Spider ETF will be thrown in. That brings you up to $46. Then I throw in the $100 value of the charting software. That's what we charge each month for our charting software. $120 value of either of these courses and 50% off on the course turns out to be your $596 value. You can give it away. You can keep it for yourself. You tell us when you start the course. Okay, so you might buy it now and put it away for 6 months. We have people that do that. I have people that did it for a year. I honor it, okay? As long as I'm in business, why wouldn't I honor it? And that's how it works. But this is about education. This is about something you're going to carry with you. It's not about a sweater going in a drawer. If you know a young person or somebody that's looking, hey, I've got time, I want to learn trading. I can't tell you how many of my friends come to me and they say, I'm now retiring, and I want to trade. And I give them the courses, away we go, and it's from there. That's the idea here. So how do you go through all this? Well, you go to iraepstein.com. On the top left, you'll see New Year Charting Course Sale. Give it a click, away you go. $299.95 for everything. I'm Ira. I'll catch up with you first thing in the morning. You take care.